Hi, today we are in beautiful Redwood City at PubMatic's office. Hi Rajeev, how are you and what do you do?
Hi, Martin. Good to be here with you.
Awesome.
My name is Rajeev Goel, co-founder and CEO of PubMatic.
What made you start this company?
Sure. So PubMatic is actually my second startup. I was born and raised here in Silicon Valley, and I did my first startup when I was in college, along with my brother, who was the founder of the company. And he and I started PubMatic as well, along with a couple of other co-founders. And really, the opportunity around PubMatic came from our own experimentation as being publishers and trying to monetize content and websites. Now, he and I both have masters in computer science, so we think about things from a technology, data, and systems perspective. And as we were trying to monetize some properties that we had set up, we discovered many of the challenges around how advertising, the buying and selling of advertising has changed from being property or content based to being audience based. And at the same time, there were no systems or no technology applications to help publishers with this. And so we felt we could create a very significant multi-billion-dollar technology and services company focused on the needs of publishers. And that's exactly what we've been doing for the last 9 or so years.
Cool. So this means that PubMatic directly was sprang out of your previous startup.
So actually, the first startup was back in the mid '90s. So
Yeah.
I'm probably a little bit older than I look. And then after that, I spent about 5 years in strategy consulting, so selling to Fortune 1000 companies, Kraft Foods, Lowe's Home Improvement, Allstate Insurance. And then I spent a couple of years with the German software company SAP here in Palo Alto. So I was at SAP, and Amar was he was at McKinsey, and then Microsoft. So he was at Microsoft in ad sales, and we both thought we wanted to get back to our entrepreneurial roots and build something from scratch. And so as we experimented with website monetization, we discovered the opportunity around PubMatic.
Cool. Let's talk about the business model of PubMatic. So what are the specific customer segments that you're targeting?
Sure. So, when we look at the advertising industry, what we found is that large publishers are significantly underserved in terms of partners that are helping them, in terms of technology, and in terms of services. So if you look at the advertiser side of the ecosystem, there are very large agencies, right, and agency holding companies, and they help the marketers, the brands, figure out where to spend their advertising budgets. The flip side of that, of course, is that big media companies, app developers, publishers, they have to build the content and the audience that those marketers want to spend on, and they don't have any real help. And so that's what we created PubMatic for. And so PubMatic today is a leading software platform company, and we help these big publishers maximize the value of all of their digital assets. And we do that through technology software platform that is licensed on a fee basis.
And is it that you're only helping them to monetize the content, or are you also helping in producing and distributing this content?
Yes, we don't help them actually generate new content, but what we do help them with is three distinct things. First is yield management, so helping them drive as much revenue as possible for every single ad impression. Second is workflow automation. So there's a lot of things that happen inside of a publisher or an app developer that are very manual in nature. And we can improve a lot of those outcomes by informing it with data and then streamlining it through software automation. And the third thing is analytics. So we've recently launched a real-time analytics platform, and this is the industry's leading analytics solution that really helps these publishers and app developers better understand what exactly is happening inside of their business so they get new insights and can create new opportunities and new initiatives.
But this would mean, okay, understood, yield management, helping them based on the current kind of content and eyeballs, monetizing or improving the CPMs, for example. And but on this automation and analytics part, it would, I guess, help the publisher and understand which content is performing better, so he can produce more of those content. Right?
Yeah, I think much of the technology that we've built is applicable as well to the content as well as the advertising, and that's an area that we hope to explore much more deeply in the coming few years.
Cool. Tell me about the beginnings of the startup, because if you are building a two-sided model somehow, how did you find the first customers? I guess you targeted first publishers.
Yeah, that's right. So when we first launched we started the company in 2006 and launched the first version of the platform in 2007. we launched it on a self-service open basis. So we knew that this was a very disruptive technology, disruptive approach, and we couldn't identify all the potential customers or more importantly, how customers would actually use the platform. And so we launched it on an open basis. People could come and sign up for free while we were under beta and try out the application and use it. And we would actually spend a lot of our time in the first 6 months just calling up customers that had signed up for the product and asking them, was it working for them, what was working well, what was not working well, what additional features they would like. So we spent a lot of time just talking to those customers. And I think taking that very open approach when you're the first in a market, when you're pioneering a new market, is very, very good because you can never really imagine how your customers will fully use or utilize your solution.
Okay, so and this means after you introduced this your first version for free, you build up quite some scale, I suppose, based on the publishers, and only then you started to onboard advertisers?
Yeah, so we actually work directly with publishers. We don't work directly with advertisers. Okay. So the advertisers work with us through their own technology partner, typically a demand-side platform or other type of exchange solution. But as we started to discover which types of publishers, which segments our product was resonating with the most, we moved from being a free beta to being a premium solution that's on a paid basis. Mm-hmm. And in fact, we only work today with several hundred publishers, about 500 or 600 publishers globally, but we target the largest publishers in the world. So our customers are media companies like NBC, Spotify, New York Times, so very, very large publishing organizations or applications, mobile applications. And what we found is that by being more selective and working with fewer but much larger publishing organizations, we can really go much deeper into helping them drive their business better, and that is a better business opportunity for them and better business for us.
Rajeev, how is the revenue model working, and how did you come up with a specific pricing tier?
Yeah, so pricing, like a lot of things, came through experimentation, but we charge the publishers a fee for the use of the platform, and the demand side platforms that I mentioned earlier that also bid and buy media and audience on our platform. We have fee-based solutions for them, and these are primarily on a revenue share basis, where we charge a fee equivalent to some percentage of the media value that these publishers and buying organizations, buying technology companies transact on our platform. And figuring out what exactly that fee should be is I would say a constant experiment in some ways. So we're always testing new pricing. We're always taking new approaches to market, and seeing what's resonating with customers, and seeing what they like, what they don't like. And I think as a market grows and matures, there's also opportunities to change pricing. So in the early stages of our business, customers wanted a risk-based approach where we would only take a fee if we could demonstrate certain results. But as our model became more and more common and publishers understood that there were real gains, then they were willing to pay a fee for all of their business. But that's a lower fee, but that has actually worked out very well for them and for us.
Rajeev, you see so many publishers. What type of trends can you identify in the publishing industry?
Yeah, I think obviously one of the biggest trends is the shift towards mobile. So within our own publisher base, maybe 3 years ago, 10 to 20% of the traffic that these publishers had was on mobile devices. And now that's well over 50% for the vast majority of publishers. And of course, for some app developers, they have only mobile application or mobile experience. They don't have a desktop experience. And I think publishers are really struggling to figure out how do they best monetize and build a consumer experience in that environment. So that, I think, is one of the biggest trends. We recently published some data to show that we've closed the mobile advertising gap on our platform, where publishers actually see higher mobile CPMs than they do desktop CPMs, which I think is great news for publishers. Second key trend is the shift towards real-time bidding or programmatic advertising. So typically advertising has been bought and sold by hand. Yeah. So you'd have expensive salespeople from the publisher that are courting the advertisers, and that process is changing to be much more one about audiences. I want to find high-quality audiences with specific attributes, and they want to find them in real time so that based on whatever you've done in the last hour, day, or week on the internet and exhibited certain behaviors or interests, advertisers can target that on an anonymous basis. And so that is also changing, I think, how advertising is being bought and sold. And then I think the third big trend is, of course, you've got the walled gardens, right? So the likes of Google and Facebook and these other, what are typically considered technology companies, but in fact are making the vast majority of their revenue through media and advertising sales. So Google, of course, is a very large publisher. They own YouTube, Gmail, Maps, right? These are huge properties. Facebook, of course, makes almost all of its revenue through advertising. So these media technology companies are putting significant competitive pressure on traditional publishers, and I think those publishers are trying to figure out how do they react to that and how do they thrive and succeed.
And what is your perspective on the paywalls? Because in Germany, and I think the New York Times as well, is increasingly trying to put content behind paywalls. Do you think this is some kind of a permanent trend, or do you think, okay, maybe this is just a short-term trend?
Yeah, I think paywalls definitely have a future in the media industry. I think the real challenge is how many companies have premium enough content or unique enough content that they can charge for it, and consumers would be willing to pay for it. And I think that's a pretty slim number of publishers. Obviously, some well-known examples like Axel Springer in Germany, New York Times or Wall Street Journal in the US. But I think after 10, 20, maybe 50 titles, the number of properties that significant number of consumers are actually willing to pay for drops significantly. And of course, the cost of creating news, creating content, distributing it, all of those things is quite expensive. So I think a paywall will be a suitable solution for a handful of media companies, but I think we will definitely need to see advertising even beyond that.
My perception is that the whole publisher world is becoming a little bit more volatile over the last maybe 5 years or so. Some bigger publishers are going a little bit down in terms of the number of viewers, and some media like Upworthy or so are shooting up like in a year or so. What is your perspective on that?
Yeah, I think that's right, and it's clear that in today's world of mobile devices, viral distribution, or referral through friends, there are many new ways in which to make a publishing or media company succeed, and many of the traditional ways no longer work, right? So subscriptions and these types of things, heavy paid media, buying advertising, buying distribution. A lot of those things don't work, but like you said, Upworthy or BuzzFeed or some of these other newer models where they take advantage of creating content that is more viral, more snackable, and more shareable is how they're driving distribution, and then of course monetizing that through advertising. So I think that requires, though, a very fundamental rethink of how newsrooms are built. So in a lot of these companies, they compensate the writers based on how many shares their articles get. That's a very different value system, much less economic system, than going after long format journalism that can win a Pulitzer Prize or other such industry award. So I think many of these traditional media companies have to rethink, what does it mean to be a publisher? What does it mean to be a news bureau? And how do we succeed in the new world? And I think they're, of course, struggling with that as it may mean, changing their actual identity.
Rajeev, over the last 9 years, what have been the major obstacles while building PubMatic, and how did you overcome them?
Yeah, I think we've had many obstacles, and I'm sure we'll have many more to come. I think first obstacle was when we launched the business, it was new and disruptive, and so people did not understand what the value was, how to use it, all of these things. So we had a multi-year period of education in the market where we had to really educate publishers, educate advertisers on what is our model, why is it valuable, how could it help them. And I think once we achieved that, then we saw very significant growth. I think another key challenge in this industry, in the advertising industry, online industry, is just the rapid pace of change. So innovation cycles, technology cycles here are 6 to 12 months in nature. And so if you're not constantly innovating, then you have to you're going to be out of business pretty soon. And so one of the things that we've done, I think with significant success, is we've built a global engineering team About 20% is here in the US and 80% is in India. And that lets us innovate in real time around the world, and also innovate at a price point in terms of our cost basis that is very different, that drives to profitability in our business. So these, I would say, are two of the biggest challenges.
Okay. One question to the operations. How do you manage the operations? Because you have an office here in the Silicon Valley, like I guess mostly for tech reasons. Mm-hmm. And then I guess you have an office in New York where lots of publishers are.
That's right.
And potentially maybe only for customer relations and sales. And how are you serving the other worldwide or international clients?
Yeah, so we have 13 offices now around the world. So we've got 3 or 4 in the US. We have 4 or 5 across Europe. So Munich, London, Paris, Stockholm, Milan. Mm-hmm. And then we have several across Asia Pacific, Tokyo, Singapore, Sydney, and India. Mm-hmm. So many of these are local sales and service offices, mm-hmm. As you mentioned, and then of course headquartered here in Silicon Valley, and then significant development in India. Mm-hmm. So we've been a global business from day one. So 2 of my co-founders were based in India, mm-hmm. Are based in India, and 2 of them are out here. Okay. And so Silicon Valley and in India are exactly on opposite sides of the world, yeah. And then we've just been filling in all of the space in between, but it does require operating on a different level, mm-hmm. In order to succeed in being very global from day one. And that's one of the lessons I learned at SAP, in fact, where I was working here in Palo Alto. Of course, headquarters is in Waldorf, Germany, mm-hmm. And then significant operations in China and elsewhere around the world. And so you learn to, I think, communicate differently. You learn to build products in a different fashion. You learn certain discipline in how you take products to market and sell them, so that your global sales force can be up to speed on them. And those are many of the lessons that I've tried to apply here at PubMatic.
And when you start, Rajeev, did you start with the development team in India based on your Indian background, or did you start with some developer team here in the Silicon Valley?
Yeah, in fact, our first couple dozen developers were all in India. Mm-hmm. So at one point we were about 30 people, just myself here in Silicon Valley, and 29 people in India. And I was doing everything non-development related, and driving product and driving business and marketing and all of those things. And we tried to put every dollar we could into technology and research and development at the beginning, and then as we started to sign up customers, then we of course evolved the business-facing teams.
What I hear from lots of people is that you are working with Indian developers. You need to really focus on the quality, because they have a different kind of mindset than maybe people from the US or Europe, etc. How did you in the beginning choose the right developers for your team?
Yeah, I think that's an important question, and particularly in environments where there isn't necessarily the same startup culture, mm-hmm. there can be a desire for people to work at large companies where there's less risk, less perceived risk, I should say, and there's the bigger brand names. So what we did is we looked for a combination of 2 things. One is somebody who had proven ability to develop well. Mm-hmm. And by that I mean they'd worked in development organizations for several years. We could give them code tests and things like that to actually vet their coding abilities. And then second, we looked for the right mindset. Mm-hmm. So we wanted younger, more entrepreneurial, hungry developers, men and women who really were not satisfied with a lot of the maintenance work that happens at big development organizations in India, and instead were hungry to do real innovation. And then one of the other things we've done is we've let those folks travel quite a bit to the US. So it's very important for them to meet with customers, be on the front lines of solving for customer problems, because that's a very different mindset and approach than sitting in a building all day and kind of coding in abstract.
Cool. Imagine your little daughter comes to you and says, Papi, I would like to start a company. What advice would you give her?
Yeah, so I think a couple of things, and I actually have 2 boys, so one's 4 and one's 5, so maybe they'll do that one day. So I think first thing is, for successful companies, it's very rare that the initial idea is actually the successful idea 5, 10, 15 years on. So if you look at Facebook, if you look at Google, you look at any companies people would deem a success, the business model tends to change over time. What typically doesn't change is the space that the team is operating in, right? And so I think it's very important that entrepreneurs stay very open to iterating and listening to feedback from customers in the market on whether something's working or not working, right? So that I think is very important. You have to be willing to challenge your own assumptions and change your model, change your business, change the solution that you're bringing to market as you get feedback that comes in. I think second, a lot of companies focus from a team perspective on the right outcomes with the people that they hire. So hitting certain revenue targets or shipping certain products. I think that, of course, is important. I think it's also important to focus on the right behaviors among the team. Because as a business scales up, the types of outcomes you're looking for will change from quarter to quarter and year to year. But oftentimes the behaviors that you want from the team will be very consistent. And so it's really important, I think, to train those behaviors in and talk about those right behaviors from very, very early on so that there's an alignment and you don't find that you have a pocket of the company that's behaving in a very different way than the rest of the company, and that can create a significant challenge.
Can you give an example of what this means?
Sure, yeah. So from a behavior perspective, it could be we want to have a customer service orientation, right? Meaning we come to work in the morning thinking about how do we make our customers' business a better business. Now, whatever the financial goals are or the new customer sign-up goals are, that will change from one quarter to the next or from 1 year to the next. But if that customer service orientation is important in your business, you want to make sure that not only the people on the front lines, but people in the finance organization, people in the legal organization, people in the product and development organization, they also have that customer service orientation, and that's a known and valued thing inside the company, because when you're 30 people, it will certainly be important, but it'll be even more important when you're 300 or 3,000 people, and it's hard for the CEO or the founder to be talking with everybody inside of the business. Right. And then I think the maybe third piece of advice would be to organize the company so that different teams or different employees are focused on different time horizons. So if you can have some employees that are focused on this quarter or the next 6 months, and then some employees that are focused on 1 to 2 years out, what's happening, what are the key trends, and what are the things that we need to be aware of and focused on, then you can, I think, build a very powerful company where you don't get surprised and instead are changing the market and driving the market as opposed to having to react to the market.
Cool. Thank you so much, Rajeev, for your time.
Thank you, Martin. It was a pleasure.
Nice. And next time you are thinking about starting a company, at some point you should think about your corporate values, because they remain kind of stable over time and they will have a big impact as your company grows. Great.
Thank you.
Thank you so much.
Great.